Okay, let's unpack this. We're living in this era that is just defined by radical global mobility. If you really look at the data, we're talking about millions of people. Digital nomads, remote founders, freelancers, creators, they're all constantly on the move.
It's a huge demographic shift. You can't deny it. You've got this whole class of people earning money remotely, maybe living in 3, 4 different countries a year, and they're basically demanding a life without borders.
Right.
The problem is, while travel has become almost borderless, our financial systems, they haven't kept up at all.
And that brings us right to the core conflict we're diving into today. Your traditional financial systems, I'm talking about your standard bank, your legacy credit cards, they fail. The moment you try to live that truly mobile life, they completely fall apart. We've seen it described perfectly. They collapse the moment you cross borders.
It's the ultimate friction point. It really is. Your entire financial toolkit, the one you've had for years, is built on this really archaic assumption that you have one fixed address, one tax home, that all your money flows within one country.
And the second you break that pattern,
The system just sees you as a risk. Or worse, it just denies you service outright.
which is exactly why this market for specialized crypto cards is, well, it's exploding. They are fixing global payments for people who want to, as they say, live without limits.
Yeah.
So our mission for you today is to give a really clear breakdown. We need to understand why traditional banking is failing, what new solutions are out there, and, this is the critical part, what features actually define the best card for someone who is always on the move. So let's start with the pain. The necessity of it all. We aren't talking about small things, like slow Wi-Fi in a cafe. We're talking about real, genuine financial blockages. What are the specific systemic failures that banks inflict on travelers?
Well, the failures are really architectural. They're built into the system itself. The biggest issue, probably, is the reliance on the global correspondent banking network. That all runs on Swift messaging.
The old system.
The very old system. Every time you cross a border, the banks have to introduce friction because they're settling accounts through all these different intermediary banks, and that introduces delays, costs, and risk. And all of that gets pushed right onto you, the consumer.
Okay, so is that why my card gets blocked when I, say, use it in Thailand 10 hours after using it in Germany? They just think it's fraud because the system can't even comprehend that kind of movement speed.
Exactly. The risk algorithms are static. They're not built for 21st century travel. They flag transactions based on geographical inconsistency. But beyond that, the single biggest failure is this stubborn requirement for local proof of residence.
The utility bill
The
problem.
utility bill problem. If you're renting Airbnbs or you're on a temporary visa or using a mail forwarding service, banks will often just refuse to let you open an account. Or worse, they'll freeze the funds you already have until you can produce paperwork that you literally cannot generate.
And that systemic failure, that's what turns a crypto card from, a cool tech gadget into an absolute survival tool. Traditional banking locks you down based on where you are, but decentralized finance.
It doesn't care where you are. The
Yeah.
fix is just so fundamental. Crypto operates on these borderless, decentralized ledgers. So a crypto card gives you immediate control, immediate flexibility, because it's like an instant bridge. It lets you spend your digital assets anywhere that Visa or MasterCard is accepted.
An instant is the key word there.
Yeah.
How do these cards actually manage to skip all that banking bureaucracy and, more importantly, the huge fees that come with it?
It all comes down to conversion at the point of sale. That's the magic.
Yeah.
So instead of waiting on a bank's foreign exchange desk, these cards tap into what are called liquidity pools. They instantaneously convert your crypto.
Yeah.
And for daily spending, that's usually a stable coin like USDT, not something volatile like Bitcoin.
Right, for stability.
For stability, it converts it into the local fiat currency. The whole thing is settled digitally, and it's fast. It just bypasses all those layers of correspondent banks that cause the delays, and critically, those crazy high foreign exchange markups. You're keeping full control of your money outside of those old geographic chains.
That makes perfect sense. If the problem is the geographic middleman, the solution is just technology that gets rid of them. So it's clear that this demand from travelers is really pushing innovation forward. The industry is moving fast. When we look at the market right now, what are the, say, 3 main categories of crypto cards that someone should know about?
The three types really reflect different ideas about where your assets are held, where the custody and control is. The first, and it's probably the one most people have heard of, are the exchange-based cards. So these are issued by the big centralized trading platforms, think Binance, Coinbase, Nexo.
Okay.
They're great if you already keep most of your funds on that specific exchange because the card just links right to your wallet balance there. It's very seamless in that context.
But wait, if they're tied to one specific exchange, that sounds like it could be a real problem for someone who's truly borderless.
Right. Absolutely. That is the main drawback for a global traveler. Geographical limitation. These platforms are heavily geo-restricted. It all depends on where the company is legally allowed to operate or where regulators give them the green light. If that exchange decides to pull out of a country you're in,
Your card just stops working.
it could stop working overnight, yeah, which makes them a pretty poor choice if you need something you can rely on anywhere in the world.
You're basically letting the corporation's borders become your borders. Okay, so what's the second category? The one that sounds like it was built to solve exactly this problem.
That would be the fintech crypto card. These are independent solutions. Often they're highly specialized, and they're built from the ground up for global payments, specifically for non-resident users.
So that's their whole mission.
That's their core value proposition. Flexible onboarding, real-world spending features, and they're not chained to some huge trading ecosystem. They solve that compliance problem by specializing in identity verification that doesn't demand a utility bill from one fixed address.
That's a massive difference. Okay, in the third category, it sounds like it's more about the underlying tech.
It is. Those are the white label crypto cards.
Yeah.
This is basically infrastructure as a service. It lets other companies, brands, startups, even loyalty programs launch their own branded card really, really quickly. They use an underlying infrastructure provider. We saw Pintopay's infrastructure mentioned to handle all the hard stuff, the card issuance, the crypto to fiat conversion.
So they handle the mechanics.
Exactly. And this lets the whole payment landscape diversify much faster because not every new company has to build all the payment rails and compliance from scratch.
Okay, here's where it gets really interesting for me. Once you understand the different types, the real challenge is figuring out which card is actually built for that constant, high-friction lifestyle. What separates just a basic crypto card from a real global travel solution that actively gets rid of that border friction?
You need a checklist. You really do. Because a lot of cards, they might solve one problem, like letting you spend some Bitcoin, but very few of them solve for the entire lifestyle. Our sources point to 7 essential features that define a true zero-friction travel card.
All right, let's run through them. But let's focus on the why behind each one. Feature 1 seems obvious.
Yep.
Basic reach.
It has to work worldwide, and that means it's not region-locked. If it's on the Visa or MasterCard network, you've got max coverage, but you have to check if the issuer hasn't put their own geographic limits on it. Then, feature 2. Modern convenience. It absolutely must support Apple Pay or Google Pay.
Of course. You don't want to be fumbling for a plastic card when you're rushing through an airport or trying to tap onto a subway in a new city.
Exactly.
Okay, now for the core mechanics. We talked about instant conversion. What makes that process solid and not risky?
So that's feature 3. Guaranteed instant crypto to fiat conversion. The real tech trick here is all about minimizing volatility risk. The best cards do this by leaning heavily on stablecoins, mostly USDT or something similar pegged to the US dollar.
Because the value doesn't jump around.
Right, it's stable. So the conversion rate between that token and the local currency is predictable. When you swipe, an API hits a liquidity pool, confirms the dollar value, and settles the transaction in fiat almost instantly.
Okay, so that really clarifies the role of stablecoins. You use something like USDT for your daily coffee, not Bitcoin. Now, feature 4 is something every traveler hates. Fees. If a card says 0 cross-border fees, is that actually true, or is there a catch?
Feature 4, 0 hidden cross-border fees. And that word hidden is critical. Traditional banks, they'll make maybe 3 to 5% on foreign exchange markups. Crypto cards can genuinely get around this because they aren't using the bank's exchange rate. They're using crypto market liquidity, which has a much, much tighter spread.
Wait, okay, that's a good point. If they offer 0 fees, how do they make money? Are there hidden spreads or subscription models we should know about?
That's the right question to ask. They do away with those awful cross-border fees, but most successful fintechs run on one of 2 models. Either there's a very small, transparent spread on the conversion rate way lower than a bank's, or there's a tiered subscription model. You pay a monthly fee to get higher spending limits or better rewards.
So the revenue model is clear. It's not buried in the conversion rate.
It's transparent, and transparency is key.
Absolutely. Okay, feature 5. This seems to tackle the biggest nightmare for non-residents.
Feature 5, stable onboarding. That is specifically for non-resident users. This is maybe the biggest differentiator of all. These cards are built around a KYC process that knows how to verify who you are without demanding that static proof of residence that just shuts out nomads. They confirm your identity, not your physical address.
Huge. Feature 6.
Fast top-ups. Simple as that. If your balance runs low, you need to be able to fund your card instantly from anywhere, no matter the time zone.
And lastly, flexibility with your actual crypto.
Feature 7, support for multiple cryptocurrencies. Because even if you spend USDT for stability, you might hold your main savings in Bitcoin or Ether. A truly flexible card lets you top up from any of your major holdings, which gives you resilience as you manage your money across different continents.
Put all 7 of those together, and you get a tool that's basically immune to that border friction. It's so clear that the best tools aren't just designed to solve one problem, like one transaction. They're designed to solve for the whole lifestyle. A globally mobile person isn't just buying groceries. They could be running their entire business across 3 different time zones.
Precisely. You need one financial tool that just works. Whether you're paying a contractor in Singapore, a utility bill in Portugal, or your hotel in Mexico, you need to do all that without that constant nagging worry that you're going to get blocked because you look suspicious to some centralized bank algorithm.
And the sources we looked at pointed to the Pintopay card as a good current example of this whole philosophy in action. How does that specific card stack up against that 7-point checklist?
Well, Pintopay is described as a modern card for a borderless life. It's a great case study because it shows you have to maximize both coverage and flexibility. It works in over 150 countries, so it's using those established card rails. And it handles the full digital experience, Apple Pay, Google Pay, right out of the box.
So it's globally compliant, but also locally convenient. What about the funding side of things that we just talked about?
It addresses that directly. The need for fast multi-asset top-ups is there. It supports major liquid assets, so you have USDT for spending stability, but also BTC and ETH for larger capital moves. So by combining that geographic reach, the digital integration, and the multi-asset flexibility, it actually achieves that goal of zero border friction. It's proof that the tech is here right now to give people a level of freedom their bank just can't offer.
So what does this all mean if we put it all together for you, our listener? What's the big takeaway from this huge shift in global payments?
I think the conclusion is immediate, and it should really reshape how you think about your money if you're globally mobile. Crypto cards are not some far-off speculative future. They are the optimized present. The tech is mature, the solutions are here, and they are built specifically for the most dynamic, location-independent people in the global economy.
Yet the era of being financially tied to a physical address or constantly getting hit with terrible FX fees, it's ending. It's ending fast. If you're someone who crosses borders more often than you change SIM cards, having one of these globally optimized crypto solutions is no longer optional. It's an operational necessity.
It means you can travel lighter, you can pay smarter, and you can truly live globally, knowing your financial rails are just as mobile as you are. When you've got stable coins and a digital wallet and a card that guarantees it will work anywhere, the world really does open up.
And a final, powerful thought to leave you with, building on this idea of new tech circumventing old systems. Given that global payments are now being redefined by decentralized tech that actively avoids the legal need for residency proof, what traditional, highly regulated institution beyond banking will be the next one to demand local proof of residence, only to wake up and realize they've been made completely irrelevant by a borderless technological solution? Something to mull over.